how protectionist is he going to sound in that speech?
That's the million-dollar question, right?
Yeah.
It's very hard to basically legislate for what President Trump is going to say. But we do expect that China, for example, will come out with some retaliatory measures against the U.S.
It's not going to be slowing or stopping buying of U.S. Treasuries, though, is it?
Probably not. But probably sector-related, company-related in certain industries. But again, it's hard to basically predict which companies and which sectors will be targeted in this point in time. I guess we just have to wait and see.
So you're expecting if China does whack the U.S. back, it's going to be more kind of on the regulatory front then?
Precisely, and also potentially on some tariffs as well, or some other way. We saw the thing with Marriott a couple of weeks ago relating to that. So I think it's going to be something related to kind of that area.
Okay. Is this just the tip of the iceberg, though? Washing machines, solar. I mean, for the U.S., Trump has got a long list that he could go down. Steel, aluminum, IPR, intellectual property.
This is something that we were concerned about after President Trump got elected. So last year was relatively quiet. This year he's starting with a bit of a bang in terms of slapping some of these tariffs on. It could be the start of something worse, or it could just be simply just posturing again, and then we could give it a bit of time for things to settle down.
Well, we would agree likely more than that, because it is much more political this year with midterms, congressional elections coming up in November. I mean, last year that was one of his key campaign threats, right? 45% tariffs on Chinese-made imports. Did not come to pass. Everybody breathed a big sigh of relief. But now he needs a win ahead of November, doesn't he?
No, the risk is a lot higher. But of course, he's got a win in a sense with the tax reforms, which should translate to better economic growth in the US. However, that's going to be long-term, right? He probably won't be in office when the full benefits of that tax reform comes in. If you look at what happened under Reagan...
So you don't think he's going to be two-term?
No. If you look at what happened under Ronald Reagan in terms of passing his tax reforms, it was Bill Clinton 12 years down the road that got the full benefits. So he could serve 2 terms. It's just that he still won't get the full benefits of the tax reforms. Because it does take a long time for that actually to materialize. Right, so he has got a win, but I think that win probably won't translate to people on the ground feeling it at this point in time. So maybe that's why we get all this posturing. But yes, the real risk of midterms coming up, he has to kind of shout out a bit louder in terms of what he promised a couple of years ago. So I think that the risk of that and a lot of noise in the marketplace is probably going to increase, especially when markets have run up so much already year to date.
More to play for, right?
Exactly. So probably sense of caution, time to take a bit of money off the table.
You think so? Are you telling investors that, clients?
Well, we're doing a bit of that. We've got some structures, for example, equity structures which are maturing. So we're just letting it roll off the portfolio. So that already reduced the equity exposure on the portfolios by about 1-2%. Wow. And on a company level, we're taking a bit of profit in some areas. You just look at the Hang Seng market, for example, HSCI market up double-digit already on a year-to-date basis. No doubt they're still cheap, and we still like a number of stocks in that area. But with the run-up in markets, it's probably a good time to take a bit of money off.